Welcome back to another episode of the Value Creation Nation. I'm your host, Lane Taylor, and over the past several episodes, Gene Tyndall and Scott Moon have taken us through building blocks of creating business value. We've explored how better inventory decisions create competitive advantage, why the balanced scorecard helps organizations measure what matters, and most recently, how proactive risk management helps businesses protect the value they've worked so hard to build. One thing has become clear throughout the series thus far: business doesn't operate in a vacuum. Global events, changing trade relationships, geopolitical shifts, evolving customer expectations all have a direct impact on strategy, operations, and long-term growth. And that's where today's conversation is going to take us. Today, we're going to look up north, we're going to go to Canada, and we're going to discuss all the things: trade relationships, business trends, supply chain strategies, and shaping one of the world's most important trading relationships. And on the first time on Value Creation Nation, I'm excited to bring on a special guest. And I'm actually going to let Gene introduce our guest today. So, Gene, I'm going to hand it over to you and let everyone get the introduction of our special guest today.
Yeah, thanks, Lane. And we're thrilled to have a good friend and Toronto-based consultant and industry expert, Corey Weeks. So welcome, Corey. Just a few notes for those who might not know Corey, but I know a lot of people do. He's had industry experience in some of the greatest Canadian companies like Canada Goose, and Indigo in Hudson's Bay and others. And we had the pleasure of working with Corey when he was at Tompkins International some years ago. So really pleased that Corey's agreed to join us today and share his insights into Canada and also North America and the status of supply chains and how they're changing as we go. So thanks again for being here, Corey.
Yeah, thanks, Corey. Before we get too deep into it, Corey, I know you just released a book. Why don't you give everybody a 30-second overview of your new book that you just released?
Yeah, first of all, guys, thank you for inviting me to the podcast, Value Creation Nation. Listen to the episodes. It's quite good. It resonates a lot with actually what is in the book, Scott, that you mentioned. So last year, I published a book. It's called Profitability Now, Supply Chain Inventory Management Success via the Glass Cockpit Approach. In 30 seconds, the elevator pitch is essentially about, we've got our supply chain practitioners to focus on the largest asset on the balance sheet, which is inventory. Companies, as you've mentioned in previous podcasts, we traditionally don't do a really good job from a supply chain perspective of looking and managing inventory across the horizons as we should be doing. So the book looks at why this is the case, what's the history that led us to this point, and what are the steps that we need to do to more actively manage inventory across the three horizons for success. So essentially, as an elevator pitch, that's what the book is about.
Yeah, so Corey, one of the things you've heard in our podcast we talk strongly about is the alignment of tactics to strategy. And I think your book focuses a lot on the tactics side. And so I think it's a good connection and segue from a lot of the discussions we've had to this point on our podcast related to ensuring that the actions an organization takes is aligned strategically with the value that those actions will create. Ensuring in the end of the day that customer is the main beneficiary of the value that's created. So welcome, glad to have you. As the U.S.'s key trading partner, we're excited to hear things that might be happening in Canada that will affect the way U.S. retailers interface with the Canadian market, as well as some things that you're seeing on your side of how Canada feels about the U.S. market. So with that, we're excited to have you.
Thank you. Glad to be here.
So, Corey, can you give us sort of what are the big things that are happening in Canada that folks in the U.S. should be aware of? So, what are the key topics that we need to be sensitive to and that you're going to want us to dig into during our discussion today?
And Corey, before we get to that, let me make a statement. I think what we're reading is, at least, and hearing, Ottawa, is sort of doing some things that are protecting Canada from any of this U.S. stuff that's going on. And, I kind of want to know the geopolitical situation that you see here, because we understand Ottawa's position, but it's going to affect, that maybe already has, cross-border trade and other things, and sourcing and so forth. So kind of focus a minute or two on the geopolitical side to get started.
Let me play on tug on that a minute. So you hear about America first. Is it Canada first too? I mean, is that a general feeling that seems to be carrying around the world? We hear that in the news. Is that playing in Canada?
Yeah, broadly speaking, to some extent, yes. And to both of your guys' question in terms of what is happening here in Canada, short answer is a lot. Given obviously, the dynamic, the geopolitical dynamic since 2025. Initially, the business sentiment was that, you know what, maybe it's just rhetoric, couple policy changes, and so on. So, you aren't going to see a major pivot. That sentiment has changed. The current sentiment right now, from an overall macro perspective, is the U.S. is not, or Canada is not going to break away from the U.S. It can't. I mean, 75 to 80% of Canadian exports go to the U.S., and half of those are by truck. It's the largest uninterrupted border, certainly geographically today. So you're not going to change 80%, 75% of your exports overnight. So to say that Canada's going to break away from the U.S. or Canada's going to stop trading from the U.S. is definitely over dramatic. But you are going to see some pivots. The government has clearly signaled that is, to your point, Gene, is Canada first. Or Canada preferred is probably the more polite way to put it. It's Canada preferred. And you're seeing that playing out. For example, in the last year, exports to the U.S. have dropped by about 5%, but exports to non-US countries has increased by about 16, 17%. So that balance, that redirection is starting to happen. The government has clearly signaled that, you know what, we obviously respect and we cherish the history that we have in the US, or the biggest trading partner globally of any two countries. So, that is going to be a feature moving forward. But obviously with the recent geopolitical events, we can't assume that things are always going to be stable. We have to look at other markets. You're seeing movement towards Europe. You're seeing a defrosting towards China, Asia, and China specifically. And as a result, of the stats that I just mentioned, some of that redirection is happening, and businesses at the micro level are starting to pivot and adopt some policies that reinforce that as well. So we'll talk more about some of the specifics, but the
So
short
Corey,
answer.
are you seeing certain industries be more affected than others, or is it generally across the board?
It's generally across the board, but the timing of certain industries moving beyond or faster than others is definitely there. For example, energy, lumber, and so on, dairy, agriculture, they're going to be more directly impacted, and you're going to see some shifts because a big part of the customer, the USMCA negotiations centers around those industries. So as much as the current negotiations, which, the agreement hasn't been reinstated as of July 1st, so it's still up for negotiation. So as much as those industries that I just mentioned specifically are directly impacted, you are going to see steps to redirect and to take some action earliest. Cross-border retail has been impacted, but for a different reason. More so the ending of US Section 321, where you actually had a lot of companies that set up in Canada and then directly shipped to US consumers from an e-commerce perspective because, under $800, US $800, you were allowed to enter items into the US duty-free. But with the elimination of that, retail has been directly impacted. Companies are still shipping into the US, but obviously it's under a different trading agreement or a different arrangement. Duties don't have to be paid, as opposed to before they didn't have to be paid. So you are seeing some retailing companies making network decisions. Which SKUs should I stock in Canada still that makes sense to ship into the US versus, you know what, it doesn't make sense to carry these SKUs in the US anymore because Section 321 change makes it more feasible from a network perspective to relocate that inventory to the US. So retail is being impacted in that direct manner, but in terms of the general suite of what is happening geopolitically between Canada and the US, more the extractive and the primary industries, they're the ones pivoting fastest to redress, what they see as issues to be addressed at this moment.
At the same time that there's talks going on, of course, with the U.S. and Canada, but at the same time, Canada's signed an agreement with the EU. So we're seeing that diversification already show up, I think. Isn't that correct?
Yeah, that's correct. There's
Yeah,
certainly...
the positive is
Yeah, go ahead, Scott.
No, I was just going to say the positive is with all of the tariff changes, everything going on geopolitically, the tools and technology that's available today to companies to be able to manage the complexity, the duty drawback situation, and the variable customs that are being taxed on their product allows companies to recover some of the duplicative tax that historically would have been very difficult for a company to be able to manage. So for those that are listening that have not sort of developed developed or expanded their capability into customs management and the duty drawback technologies. Those technologies are there and available, easy to implement and easy to apply, easy now to interface with U.S. Customs and file directly as opposed to waiting for your customs broker to do it. So managing duty drawbacks and the complexity that's being created, sort of this nation first sort of complex market, is now more easily managed by the technologies that are available in the marketplace. So I just want to make sure the listener recognizes, yes, there's a lot of protectionism going on, but also technologically the systems are there to help you manage the complication that protectionism is bringing about the marketplace.
Yeah, and I build on that as well. So Gina, I'll go back to your question about pivot to Europe and so on. That is definitely happening. We've seen even recently the procurement deal with the new fighter jets, the SAF fighter jets. So Canada's looking to partner with Scandinavian countries on potentially even building these SAF fighter jets in Canada. There's a lot of aircraft building experience via Bombardier and so on. That is a direct result of obviously the geopolitical nature and issues that are happening right now. We've seen updates to the Procurement Act where, it's not necessarily Canadian first, but certainly encouraging more Canadian sourcing, Canadian content, etc. Those thresholds have been dropped to enable more Canadian sourcing. That is also a direct result of the geopolitical nature. To your point, Scott, about what you mentioned, technology, that's a great point as well, because what we are seeing from companies and what I'm focused on at 84 Group Consulting is we're helping companies enable AI for supply chain management. How do you deploy it? Where do you deploy it? And do you have the skills and consulting, support to be able to do that? What we're seeing from specific clients is there is a lot more interest in, we need solutions. AI powered will be a powerful solution in helping us manage our inventory better. To your point, Scott, what are some of the levers that we can toggle to ensure that we're utilizing and deploying our capital and using our capital as efficiently as possible? Duty drawbacks. Before, in a more stable climate, you still had some duty drawbacks and so on happening, but it wasn't necessarily front or top of mind. But with very volatile and constantly changing tariff and trade conditions, you've got to increase your ability as an organization to be able to manage all the changes and so on at the HS level. So there's a lot of interest in what is the software, what technology is available for doing that. Technology in terms of being able to manage your inventory, understanding in your network, how are you positioning inventory? Are you capitalizing it? Are you monetizing it effectively? Companies are paying greater interest in managing inventory more tactically because of the changing geopolitical conditions. So we're seeing that coming through in terms of increased requests, increased questions around how can we get better at doing this. And I know that there are quite a few companies going through AI implementations right now, AI for supply chain management implementations right now. That is exactly their focus because of the quote unquote instability that is around, and accelerated over the last 18 months.
So, Corey, talk to us a little bit about, since there is this protectionism, has there been any impact at the border itself, crossing goods across the border? Are things still pretty fluid, or are you seeing things being checked and being watched more closely than they have historically? What's happening at the border itself?
I have not seen or heard of any friction at the borders, and the rhetoric and the comments coming out from the federal government is, we're not going to take Canadians, and I say we as Canadians, we're not going to take any what we call like punitive steps and so on like that. Commerce is still happening, trade is still happening. The government is taking some macro steps to certainly, bolster Canadian competitiveness. But in terms of actual transactional level issues, haven't been hearing of anything that you wouldn't have heard about typically before 2025. So the odd instance in crossing the border, the odd customs check and so on, those are still happening, but not at any significant or accelerated or increased level than pre-2025. So the short answer is no, I haven't heard anything transactionally that would make me think that there are steps happening to seal the border, so to speak.
Yeah, before we leave the border question, how about inbound? I know working with Canadian Tire in the past, there was a lot of sourcing from China. Has that changed at all, Canada's sourcing in China?
Good question, Gene. The sourcing and where companies source is essentially still the same. You still do have a lot of sourcing out of Asia. I say Asia because you would have some shifting from China because generally companies and factories have been relocated from China. There's expanded production in Vietnam, for example, and in other areas in Asia. But if you look at Asia as a whole, it still represents a lot in terms of a higher percentage in terms of where goods are being sourced from. We're seeing that too in terms of the cargo that's coming through the Port of Vancouver. They are growing double digit in terms of volume flowing through the port of Vancouver on an annual basis. Prince Rupert, which is a bit north, is still on BC on the west coast. They're also seeing double-digit increases as well. There is a lot more like export and primary good export out of Prince Rupert compared to Vancouver. But the point is that Asia is still a very large sourcing hub for Canadian companies. That will likely continue. And as a matter of fact, in terms of Prince Rupert, Port of Prince Rupert, you're going to see an increase because a lot of exports are going to be going towards Asia as well, given what we've spoken about earlier, that, Canada is looking for different and alternative markets. So that volume and those markets are going to grow. So that means the port volumes are going to grow as well.
Yeah. We've always had the east and west coast sourcing heaviness, sort of Asia into Vancouver and the EU into Montreal. And I suppose that's continuing. My question is it changing any because of a less dependence on U.S., or maybe it's just a matter of the growth that we're hoping to see? So how would you describe it?
Yeah, it is changing. Now, the Vancouver Prince Rupert growth, that is just natural business growth out of Asia. Companies are growing and they're sourcing out of Asia. So that's what's driving a lot of the double-digit growth out of the West Coast. EU, out of Port of Montreal, is smaller growth than West Coast, is about 3 to 5% annually. We also have Halifax as well, which is flat. But again, because of the pivot towards Europe, I would expect that in the next 2 to 3 years, those percentages are going to increase because there's a direct move, to more trade with European countries and even Africa as well. So you are going to see that volume out of Halifax, out of Port of Montreal. You are going to see an increase. I would expect that certainly over the next 2 to 3 years. Air is somewhat mixed. It had grown quite a bit because of a lot of the imports from fast fashion imports and so on, for example, out of Asia into Canada. But a lot of that was actually supporting e-commerce shipments under Section 321 into the US as well. But with the closure of Section 321, you've got a dampening effect. So air may not be growing as much as previous years. But certainly on the ocean side, yes, I would expect certainly East Coast serving Europe to grow, and West Coast as well with the redirect, that'll continue growing as well, pretty strong. There's a trade flow.
So there's a big focus and a big push in the U.S. about making more goods in the United States. Also, there's a push to try to find partners that are closer in proximity to the United States so you can draw down your inventory, reduce the length of your supply chain, and provide faster responsiveness. Is Canada looking at that as a strategic opportunity to invest in additional factories and capacity that would support the U.S., or is that not part of Canada's strategy?
I would say that depends, and because it all depends on what are the industries that the U.S. recognizes are key industries that it says, you know what, if we want to support this industry in the U.S., we need a regional, a local and a regional supply chain to support that industry. By the way, Canada, by the way, Mexico, you can help us on that. And then the USMCA agreement factors that in. So there are a lot of dependencies there. Canada on its own can't make that call because we have to first of all understand, well, what are the key industries that will be considered important, and then are they important enough for it to become part of the USMCA negotiations that you might allow for duty-free access and so on. I am sure that the answer to that is yes, because that is the exact reason why trade has grown over the last 2 decades because of the current agreement. So I'm pretty sure that we're supportive of that, but we'll have to see the signals as to what these industries are for us to be able to support that, and then businesses at the lower level would lean into that strategy.
Yeah, a lot of times, though, the government provides incentives to help spur certain industries to be able to expand and provide capacity. That's what's happening in the U.S. right now. The government's providing funding to support the relocation of manufacturing into the U.S. I was digging for, my question was really centered around, is the Canadian government providing any similar incentives to strategically realign some of the world's manufacturing capacity into Canada? Is that part of their core thinking, or that just really hasn't resonated into the policy of the Canadian government?
Yeah, so the two aspects of that. There's a very strong domestic aspect towards that. So there's a lot of support in terms of growing the local Canadian base to serve or to do a lot more inter-province trade. For example, in the US, it is pretty much illegal for states to block inter-commerce trade. Federally, that's prohibited. In Canada, provinces have a lot more autonomy. So what has happened over the last several decades is there has been a lot of protectionist measures being placed by provinces that even restricted provinces and companies from trading across provinces, to the extent that that impacts 3 to 4% of GDP. So the Canadian government has recognized, you know what, in these circumstances, we can unlock a lot of GDP growth by just promoting a lot more within Canada trade. So with that said, investing in production capacity to support intra-Canada trade is certainly happening. The government is leaning into that pretty heavily because that represents, well, certainly we want to look afar, but if we grow our own house, why not do that? So that's low-hanging fruit that the government is going after, and they're supporting industrialization. They're supporting AI to help companies modernize, to facilitate that. Internationally, because a lot of the Canadian economy's growth over the last 2 decades has been driven by the USMCA and that trading agreement and how strong it has been across all 3 countries in North America. Of course, the Canadian government is going to support once it is clear what those industries are that are important for North America. The government is going to support that, but it can't support that in advance of knowing what the areas and what those industries are. Because the last thing you will want to do is invest in an area, but then you wake up one morning and then the policy around that area has changed. So I would say yes to the international and to U.S. support, because that has historically been the way that Canada has grown. So I don't see us shying away from that. But at the same time, the government is certainly investing in a lot of local national development, because that is unlocking 3 to 4% of GDP. That is low-hanging fruit that you don't need external policy for.
You referenced previously the importance of Vancouver as the main port coming into Canada, particularly from Asia. Is the government doing anything technologically to improve the capacity or the speed at which that rail performs, or are they doing any modifications that folks that may be listening to this podcast should be aware of?
Yeah, there's certainly investments happening annually, and over the next 5 years, there's going to be billions of dollars being invested. So the 2 main ports on the West Coast are Port of Vancouver, it's like 3 terminals, and also 4 terminals, and also Port of Prince Rupert. Every year, there's millions of dollars being invested. In the next, I want to say 1 to 3 year horizon, you're going to see a lot more around, intermodal activities and investments to drive intermodal transloading, being able to be more efficient, so that when vessels dock, that cargo is put on trains, put on trucks, leaves the port, goes to destination quickly, so that dwell times are reduced, and that transit time of having that cargo moving, those transit times are reduced. So there's a lot of energy and investment on making that a lot faster. You do have some capital projects also on the pipeline as well, in terms of double tracks, in terms of bridge and bridge expansion. So there's some real network investments happening, but a lot of the investments over the next 1 to 3 years are more centered around making the overall network flow a lot more efficient. How can we get better scheduling, better transload, better off and onload, etc. So that's where you're seeing most of the investment. But yes, investment dollars are being put into the ports to modernize and to make sure that the throughput is happening as it should be.
Sorry, Gene, let me just pull on that thread just a little bit more. Is the increased efficiency coming through automation and robotics, or what specifically is being done to increase the productivity and efficiency at the ports?
Is more so software driven to working with to facilitate partnerships between carriers and companies using the rail, better scheduling, better transloading. I don't want to say robotics. I haven't heard a lot in terms of port automation, so I don't want to say robotics. It's mostly centered around how can we get better at scheduling and working with our port partners, so we can get more throughput going into the port, exiting port, and shorter overall times that cargo spends within our network. So it's more around that. And the AI technology is more centered around helping that and facilitating that partnership, and also those scheduling algorithms to make that throughput significantly increase. I'm sure that the government is and the ports are also looking at automation, but I'm not hearing a lot of heavy automation investment, certainly in a 1 to 3 year window.
So coordination of that is really about the accuracy of when a vessel is going to hit the port. So what do you see happening to increase? Because everybody plans several days in advance of where they are, right? So the fact that you have visibility that a container is on the yard is helpful, right? But that's reactionary. It's already there. What you want is information that you can plan for. What's the industry doing in Canada to try to be better and more accurate about when the vessels are going to land? Anything?
There are reports that ports are working and working with carriers on that in terms of what you mentioned. The exact specifics I can't get into right now this morning, but that is part of the how do we look at the overall network of how long cargo is dwelling at the port, how long is it taking for it to be transloaded, and then moving on to the destination. Who are all of the actors that we need to pull together to then find out what are the solutions that we need to get that throughput increase and that cargo moving. So the short answer is yes, it is a part of the solution. The exact specifics I can't detail this morning, but that's where the focus is over the next 1 to 3 years, because that is seen as we can get at that without a lot of investment that takes 2 to 5 years to realize. So that's where the government is focusing on. And the other thing as well is if we focus, the government and ports focus on that, you can significantly increase the throughput without a lot of capital investment. So again, that's why it makes sense to focus on these areas, because you can give yourself a capacity and a throughput bump without having to go to port expansion or additional terminal expansion, even though additional terminal expansion is on the cards for, if I'm not mistaken, Port of Montreal, but that's at a longer horizon beyond 1 to 3 years.
Corey, in the short time we have left, I wanted to spend a few minutes on distribution. We've covered international. We've talked about manufacturing. What's going on with product distribution? People in the U.S. know that population centers in Canada, where they basically are. And of course, that gives a lot of issues to the distribution network. But can you sort of talk about what's changing in product distribution in Canada, if anything?
Yeah, well, geographically, Canada's a huge country, but to your point, Gene, you have a few cities, right? Population of 42 million people, but it's not evenly spread across the broad geography. The major population centers are, GTA, Greater Toronto area, Greater Montreal area, and then, you have out west, Greater Vancouver, and to some extent, obviously, Calgary and Edmonton, that area. So in terms of where the population is growing, we're adding about 300,000 to 500,000 folks to Canada every single year. That is still following the current demographic trend. You're seeing a lot in the east in terms of Toronto and in terms of Montreal, or you're seeing out west in terms of Vancouver and Calgary, Edmonton corridor. So distribution wise, you're not seeing a whole shifting of population gravity away from that. That is expected to be the population gravitational pull certainly over the 5 to 10 years. I'm sure federally, the government would like to encourage, and there are programs to encourage more even population distribution. But the reality is that's where most people are. That's where most activities are. So that's where people are going to gravitate to. With that said, though, you're seeing companies, transport companies, courier companies, strengthening their ability to distribute within those geographic centers and to distribute across those geographic centers. You have the likes of Cargojet. FedEx has a Canadian carrier. They're moving a lot of air freight across these corridors and so on as well. So certainly the within the geographic areas and the across geographic areas, those networks are continuing to strengthen. You have Canadian National and Canadian Pacific. Those rail companies are continuing to invest in the network to increase the flow across Canada as well. So overall, there is logistics network improvement to facilitate cross-Canada distribution, cross-Canada product movement, but essentially still going to be dictated by those 4 rail population centers for the foreseeable future. Those are really key population centers are. So that's where the improvement is going to be focused on, certainly.
Let me play on that just a little bit to your point, Gene. What are you seeing? You seeing any receptivity to autonomous vehicles? That's one way to keep costs contained, is to use it through an autonomous vehicle. Are you seeing that be accepted in Canada? Is it being encouraged in Canada? Is the government supporting that as an initiative? What's the sentiment in Canada concerning autonomous vehicles?
Receptivity, yes. Serious, large projects, a lot of conversations about it, no. in terms of what we're looking at in terms of improving infrastructure, improving logistics landscape, not hearing autonomous trucking or autonomous product movement being a key or main thing. But at the same time, I'm not hearing big red flags or people being opposed to it. So I think I'll put it in the bucket of it's an interesting solution. Certainly no one is opposed to it. If it makes sense, you're going to hear more companies talking about it, but it's kind of like so far out there is that there are basic things that can be done first before we get to the more, I don't want to call it Star Trek, Star Wars options, but it's more in that light. There are a lot more basic things that could be done to significantly increase throughput before we get to that level.
So one of the things that Amazon did, good for the customer, bad for the business, is heighten this expectation of order to receipt. Drones have popped on the scene, are being piloted pretty heavily here in the United States to be able to overcome distance, particularly in rural America, to be able to also deliver to rural America efficiently and economically. Canada strikes me as having a lot of rural America. Are drones being heavily thought about, accepted, invested in? What's the sentiment in Canada related to drones and the receptivity of drones?
Actually, that's a good point. There are leading Canadian companies in the area of drone technology. I actually worked with one 3PL. They're actually doing drone deliveries in Canada, more for healthcare. It's a GTA based 3PL provider, and they've successfully trialed, sending drone. It's around radioisotopes that the hospital may need urgently in terms of diagnosis and tests. Those are being delivered on a daily basis. Drone technology and, using drone for delivery is something that is talked about more than I would say autonomous vehicle in my circles. So that is something that we're leaning into. You're hearing more about it, and some leading Canadian companies are actually doing good work in Africa when it comes to drone technology as well. So that is more of a common, if you want to call it, futuristic theme. That is certainly up there in terms of a potential. You also have, it's kind of, drone is more within warehouses, but I do know of several companies that are using drones for inventory count as well. That is being deployed across facilities in Canada. So I am hearing more of drone technology being used for inventory count, pallet-based inventory. So, you have large warehouses, you have pallet level, single SKU inventory. They're using drone technology successfully on inventory counts. And I've actually been in warehouses where that's happening within the last 12 months. So that one is one that you're hearing and seeing more adoption.
Yeah, on top of that, there's actually infrared technology that can look inside of the bin and tell you how many items are in the bin, even if it's not full pallet. They can look in an open carton and count how many units are there. So in the US, it's gone way beyond just full pallet position tracking. The limitation and one of the issues that folks in the US have is people don't want it flying over their home, right? So we've got a lot of more condensed areas, and people are apprehensive about having a drone flying over, particularly in that it could have, a nefarious device on it. So they're concerned that it could be used in a negative way too. So that'll be very interesting to see how drones are managed. I think ultimately that my perspective is there's got to be some rules that are set on how drones fly that probably follow more of your traditional road networks, like as though it's a vehicle, as opposed to being able to travel as the crow flies, flying over private property. But I don't know if that's discussion or there's any policies that Canada is considering. I know in the US there are concerns about that.
Yeah, it is. Similar concerns. I mean, no one wants a drone flying over their house, especially at 3 o'clock in the morning or whatever. So very similar concerns. And Transport Canada, which is the equivalent to, or Canada's version of the FAA, Transport Canada is looking at that. They're working with companies on exactly that. What are the approved corridors? Where are these corridors? Where does it make sense for drones to travel versus not? So very similar concerns. And just like the FAA is looking at it in terms of managing what are those corridors, we have Transport Canada here that manages that technology, looking at the same thing as well.
The first answer was drones will deliver to lock boxes. Then they say, well, wait a minute, who's going to unload the drone and put it in the boxes? So it's hard to envision pure automation on home deliveries for sure.
What's fascinating, as I've been a fly sitting here having this conversation, Gene and Gene and Scott know this. I have a business background and a business degree and a minor in supply chain. And I actually feel like this is the first time I've actually in that minor of supply chain. I'm listening to this and I'm like, that's what I went to college for, is listening in on this conversation right now. So this has been incredible. So yeah, Gene, Scott, I think Scott, I interrupted you there. So please feel free to kind of to wrap up and land the plane here.
Yeah. So, Corey, one last question. There was a little bit, I know our president caused a little bit of antagonism to Canadians in general. What's the general sentiment of the Canadian population to their partners to the South? Has that subsided? Is everybody sort of back to we're good partners, we're relying on one another, or is there still some negativity, residual negativity that's still there?
Yeah, what are some up as good question, Scott and Gene. What are some up as is a cautious approach? I don't think the relationship and the sentiment and the polls and so on support this. You still have travel down to the U.S. When last I checked, it was double digit. So you still have travel down in Germany, and that's across the country. Specific to any region. So I think the general sentiment is for a lot of folks are still taken aback, surprised, and a bit hurt in terms of how Canada what was viewed in some of the rhetoric coming out. I don't think it's, and I know I haven't heard the reports and seen the reports. It's not to the extent where, as I mentioned earlier, for example, our customs is restricting U.S. goods any more than before. It's not at that level, that crazy level. And federally, the government has made it clear. Listen, we're here. We support North American trade. We support USMCA. It's been responsible for a lot of growth in the region. So realistically, Canada's not going to turn its back on its largest trading neighbor and trading partner. But certainly from this and recent rhetoric, recent events, it's going to proceed more cautiously in the future. So it's not a case of abandoning the U.S. or it's not a case of abandoning the partnership. It's a case of, okay, we're a partner, but it's clear that Canada also has to look for alternatives to continue growing its own domestic base, looking for alternative trading partners and so on as well, because that only makes sense. If you have 80% of your export economy tied to a single partner, well, we all know, I mean, we're all supply chain professionals. 80% of anything in a concentrated area is never good. You want to have some level of diversification. And recent events have really made it clear that that is a smart strategy to have. And it's the same way that the U.S., in terms of looking at China and China's emergence, the U.S. is looking at a U.S. first policy. It's the same posture that Canada's adopting in terms of, as it looks at global events, Canada also has to look at what is happening domestically and bolster that and look at alternatives as well. So it's in the same perspective. So overall, I would say I don't think the relationship is long-term damage, but Canadians are mindful and wary. Well, we can't assume that it's an automatic warm and fuzzy partnership to the kingdom come.
Yeah, that example that makes me, it's an aggravation. The new cargo bridge between Detroit and Toronto is done, it's finished.
Yeah,
But it's not been opened by the Trump administration. So aggravation like that continues to get in the middle of the great relationship we had before. So I think Scott's question is spot on. We've got to really watch out for it.
I mean, I'm pretty sure the bridge is going to be open. It's a brand new spanking bridge connecting Windsor to Detroit. The 401 corridor that is at the end of that bridge is actually the busiest interstate corridor in North America altogether. There's no way that we're going to spend billions of dollars and not open it, but it's just like anything else. It's part of the uncertainty right now, but it will be open. The latest rhetoric is that it's going to be open pretty soon. So I know that cargo is going to flow. But yeah, it's just that part of the narrative of we have a partner, we're going to continue to trade with the partner, but you've got to be smart. You've got to also have alternatives as well. You can't have all of your eggs in one basket. You never know what can happen. So that's more the posture now.
Got it. Good. Very helpful.
Corey, been very informative. Appreciate the time today. Been very helpful.
Thank you.
Yeah, I think this will be an interest to a lot of people because most everybody who works with companies sells or buys up cross border into Canada. So it's a very important relationship. We all hope it continues and grows.
Appreciate the good work that you guys are doing in the podcast. Keep it up. I'm glad to be a part of the Value Creation Nation podcast, and you guys are doing excellent work. So keep it up.
Well, we look forward to having you back, Corey. We want to try to have, every month or every other month a segment so that we keep tabs on, keep a pulse on one of our biggest trading partners and what's happening and any impact it might have to those that are listening to the podcast. So we enjoyed the conversation. We look forward to having you back here in the future. And those that are listening, we hope this is a regular segment we can have Corey be a part of.
Very good.
Yeah, absolutely. And Corey, just one more time, plug yourself, tell people where they can follow you, they can get your book. What's the best place if anyone wants to get connected with you?
All right, thanks, Lynn. So in terms of myself, you can easily find me on LinkedIn. So first name Corey, Corey, last name Weeks, Weekes. I'm very active on LinkedIn. I post every day. We've also got a website as well, 84groupconsultants.com. And in terms of my book, you can find it on Amazon. We're selling on Amazon. It's called Profitability Now, Supply Chain Inventory Management Success via the Glass Cockpit Approach. So those are the places that you'll find me. Happy to chat and also chat with you.
I highly recommend it. It's a great book.
Thank you.
Yeah, and we will put all that in the show notes as well. And if you're listening to this right now, before you head out of here, do not hit X. Like I say on every episode, do us a huge favor. Go over to Apple, scroll all the way down to the bottom, give us a 5-star rating and a 5-star review. If you have not subscribed on YouTube, hit that subscribe button so you get notifications of the next episode. If you like this episode and you know that it's going to add value to someone in this industry, make sure you send it to them. It's really that simple. It's that simple to share an episode nowadays, and that's how we can get this out into the world and you can have these conversations. So with that, until next time, thanks for listening to another episode of the Value Creation Nations. We'll see you on the next episode.